So there's this quote that states, the company form of organization is one of the ingenious creations of the human mind. And when you think about it, the concept of a company really is a brilliant historical solution. Our source text points out that this setup was basically necessitated by the invention of steam power. Once we suddenly had the machines to mass produce goods, standard sole proprietorships just weren't going to cut it anymore. We desperately needed a way to separate the management from the ownership. And just like that, the company was born. Here's our game plan for today's explainer. 1. Intro to company accounts. 2. Salient legal features. 3. Private versus public companies. 4. Other types of companies. And finally, 5. A rapid-fire exam review.
All right, Section 1, Intro to Company Accounts.
Beyond just the fun historical steam engine trivia, why do companies actually exist today? Well, the primary purpose is pooling large amounts of money and modern technology, because solo proprietors and standard partnerships simply can't scrape together the massive capital and tech needed for really large-scale operations. Think about trying to build an entire modern telecommunications network or a massive automobile factory on your own. You can't. The company structure allows individuals, the shareholders, to pool their resources together while limiting their personal risk. It's essentially the ultimate vehicle for massive wealth generation. Moving on to Section 2, Salient Legal Features. Let's tackle that heavy legal jargon by breaking down some key features with easy analogies. This is absolutely where examiners love to test your conceptual understanding. First up is the incorporated association. I want you to think of a company kind of like a video game avatar. It is an artificial legal person that only comes to life once you register it with the game's servers, or, in the real world, through the operation of law under the Companies Act. Without that formal registration, the entity literally does not exist. Its entire origin is in the law. Next is the concept of a separate legal entity. This acts like a legal force field, separating the owners from the business itself. Because it's a distinct entity, the company can enter into contracts, it can sue people, and it can be sued in its own name. If the company fails, that force field kicks in and protects the shareholders. Their liability is generally limited to just the unpaid share capital they committed to, which keeps their personal assets completely safe. Then we have perpetual existence. Picture this like a never-ending relay race. Even if a runner drops out, trips, or retires, the baton, which is the company, keeps moving forward in the hands of the next runner. The source text makes this super clear. The death, insolvency, or even a complete changeover of the members doesn't affect the existence of the company at all. It was a life entirely independent of whoever happens to own its shares right now. Now, think about the practical reality of being an artificial person for a second. Since our legal avatar doesn't actually have physical hands to sign documents, historically it used a common seal, basically a really fancy rubber stamp. But hey, pay close attention to this. If you're taking an exam on the Modern Companies Act, using a common seal is now optional. Documents can be signed by 2 directors or 1 director and a company secretary instead. Okay, huge exam tip here. Mentally star this concept. While a company is an artificial legal person created by law, it is absolutely 100% not a citizen. It doesn't get a passport, it doesn't get to vote in elections, and it definitely doesn't enjoy the natural citizenship rights that you and I do. Examiners love throwing this in as a trick question. Section 3, Private versus Public Companies. Let's compare the 2 most common entities you'll run into. The contrast here is night and day. Private companies are locked down extremely tight. They restrict the right to transfer shares, they cap their non-employee members at exactly 200, and they outright prohibit inviting the general public to subscribe to their securities. Public companies? Total opposite. No maximum member limit, freely transferable shares, and they cast a huge net for capital. Let's do a quick analogy check to really lock this in. Think of a private company as an exclusive, family-run diner. You can't just walk in off the street and demand to be a co-owner, right? They restrict who they let in, keeping the group small, under 200 people. A public company is like a giant global fast food franchise. The shares are traded freely, and literally anyone with a brokerage account can buy a tiny slice of the pie. Section 4, Other Types of Companies. Before we get to financial reporting, let's look at a couple of other highly tested structures. For an entity to legally be a government company, the central government, a state government, or some combo of both has to hold not less than 51% of the paid-up share capital. That 51% is your magic number to memorize. It means the government holds the controlling interest, even if the other 49% is held by private individuals. Then we have the foreign company. This is a company incorporated outside the country, so outside India in this context, But here is the catch. If it has a place of business in India, it falls under this legal umbrella. And importantly, that presence doesn't just mean a physical brick-and-mortar office. If they operate electronically or conduct literally any business activity in the country at all, boom, they're regulated as a foreign company. Now, regardless of the type, whether you're a massive public giant or a tiny private diner, every single company has to provide a true and fair view of its affairs. They do this by preparing financial statements prescribed in Schedule 3 to the Companies Act. Think of this as the company's ultimate report card. It's got the balance sheet, the profit and loss account, cash flow statements, statement of changes in equity, and all the explanatory notes. All right, Section 5, Rapid Fire Exam Review. Okay, close your notebooks, clear your mind. Let's see what's stuck. Question 1, straight from the sources knowledge test. True or false, every single public company is automatically a listed company on a stock exchange. Lock in your answer. That is false. Unlisted public companies totally exist. A company can meet all the public criteria without taking the final step to actually list on an exchange. But flip it around. If you see a listed company, it is guaranteed to be a public company. Private companies simply cannot list their shares. Next up, true or false? Does the death, insolvency, or departure of a founding member negatively affect or end the existence of the company itself? False again. Remember the relay race? That perpetual existence of our legal avatar keeps the race going. The runners are going to change, sure, but the baton just keeps moving along the track without skipping a beat. Last one, let's bring it all home with a multiple choice question. Which of these is not a feature of a private company? A, it restricts share transfers, or B, it does not restrict the number of its members. The answer is B, because private companies absolutely do restrict their numbers. They strictly cap their non-employee members at exactly 200. Think back to that invite-only exclusive family diner. Honestly, with these analogies locked in your head, from the relay race to the legal force field, you are going to completely crush this exam. But before we wrap up, I want to leave you with a thought. If the invention of steam power forced humanity to literally invent the concept of a company, what entirely new legal structures do you think the rise of AI and decentralization will force us to invent next? Keep studying, and I'll catch you in the next explainer.